Hey, everybody. Thanks for joining us. It is exactly 7 p.m. where I'm sitting. It's probably like 4 a.m. or something where the other Kevin is sitting. It's not that late, but it's pretty late. Anyway, we're here for, I like to call these things AMAs. Sometimes we call them fireside chats. I don't even know what we're calling this one, but you're going to ask questions and I'm going to ask questions and the other Kevin's going to answer them. So that's pretty cool for me. I don't have much to do. Anyway, my name is Kevin Goos. I'm the CEO here at Coinmetro. We're a centralized exchange. I'll leave it at that. If you have questions for me, you can throw one or two in. Then I can take the heat off the other Kevin for a few minutes. But before we jump into that, I'll introduce you to Kevin, the CEO of Propbase. And Kevin, the mic is yours.
Yeah, thanks. Well, I mean, happy to be here. We've got the Kevins together, so just talking about everything. So I think we do have some similarities in our communities. Obviously we've done our listing with you guys here recently. Super happy with it. And yeah, so I mean, a little bit about me. I'm the CEO of Propbase. I'm currently located in Thailand. I've been building prop tech platforms for the last 15 years. My background is really product development, marketing, execution, business development, everything. And I love what we're building and what we do. And myself and our leadership team, we're extremely passionate about disrupting the real estate industry through blockchain and tokenization.
Awesome. That was a great intro, and it makes it much easier for me to ask the first question, which is, I'm sure there's a lot of fans already listening, but for those that haven't heard of Propbase or don't know exactly what you do, you give a bit of a hint. But yeah, give us some background on Propbase and what you guys are doing.
Yeah, so I mean, Propbase we're a real estate tokenization platform and an investment marketplace offering fractional ownership of high quality, resilient real estate assets, largely in the hospitality sector, so hotels and resorts. We work with some of the largest global brand names, so we bring them to Web3 in a strong utility-based format. So and obviously, sunny Thailand. So it's incredibly popular for tourism. There's been a huge rebound post-COVID. And, we see, a strong tourism market, hotel industry, hospitality industry here over the next 5 years. So we see hotels and resorts as being the most attractive asset classes. And as mentioned, we like fairly straightforward business models. So, users can come onto the platform. They can invest as little as $100. They can own a fraction of the property on our secondary marketplace. They can choose to sell that to another Propbase user at the time and price of their choosing from really anywhere in the world. And while that sounds simple, it's actually disrupting a huge asset class. So traditional real estate investment has been largely reserved for high net wealth individuals. It's a huge decision-making process. And now through platforms like Propbase, through fractional ownership, now the access is much higher. The barrier to entry is much lower. And so we're a relatively new project. We did our TGE about 7 months ago. We've launched one product. We're launching another product right now, actually tomorrow. So it's kind of good timing to be here. And yeah, so we have a strong technical team. We've got an amazing community management team, and we're very blessed to have probably one of the strongest communities in RWA. And that's kind of our repertoire and summary. So we're very focused on our specific geographical region, and we have, I guess, strong relationships with some of the best property developers in Southeast Asia, and that also comes from our past businesses and working with property developers, and yeah, we like what we do, and we're exceptionally good at it, or at least we like to think that we are.
Yeah. Well, I think you guys are good at it. We wouldn't be talking if you weren't. So I'm glad to have you on. I had a question, but since you kind of mentioned that you might have something cooking up for tomorrow, is there something you can share about what's launching tomorrow, or is it kind of secret?
Yeah. Oh, yeah. No, it's not secret at all. It's just a coincidence we're here now because, but yeah, we're launching Wyndham, one of our first asset offerings. So under the brand name of Wyndham, managed by publicly traded property developer CME's Assets. They were the best developer in Thailand a few years ago. They're extremely strong in the market here, and so for us it's really exciting because it really, from the day we set out to build a sophisticated platform like Propbase, and then to where we are now, 6 months later, 7 months later, reaching that goal and executing every step along the way has been a phenomenal journey. And probably, it's just kind of what's happened with us is we've really crystallized everything from our value proposition to all the way down from a product development perspective. And I think we've got one of the best products out there on the platform within the world. And we're continuing to make enhancements. So tomorrow is the launch of just the registration period, and then next week is when we actually do the sale. And then we've got all of our memberships have filled up over the last few days, and we're excited to bring that to our community, to everyone who's participants with us, signed up on our platform, and to really begin and continue on our mission of disrupting traditional real estate investment.
Awesome. I love the idea of access, because that's one of the reasons, or maybe not the reason, that I got into crypto, blockchain, and eventually founded Coinmetro, et cetera, was just trying to give the same access to regular investors or people that didn't even know they were investors, just people in general that say, a select few usually have. So being able to get into things like commercial real estate, for example, or especially into hotels, et cetera. Normally, if you have $100 in your bank account, you don't own a piece of a Wyndham property, for example, right? That's out of your reach, or was out of your reach. And so I think that's really cool. You talked a bit about, value proposition, and I think you kind of hit probably the two biggest chords in terms of what that value proposition is. But do you have anything else you'd like to share, like from a perspective of someone who might be listening, who might think that they could be an investor, might already be an investor, and also just from the case of somebody who maybe owns some real estate, to understand, this might just be a question generally, tokenization in general, but why? Like what is the value proposition? And then on the other side, I guess once you answer that, just from a business perspective, from your business perspective, where do you see kind of the key challenges moving forward after tomorrow's amazing launch?
Yeah, great. So we we started kind of with the same aspect. So we were building property portals and marketplaces before in past businesses, and we also saw that restriction of accessibility, right? So when we first conceptualized, let's say mid 2023, the concept of Propbase, our whole driver and everything that was down into our white paper, into our light paper, everything was, we want to make it accessible, we want to make it liquid, and we want to have people be able to diversify their portfolios into a range of different asset classes without the need to be worrying about things like property management or finding tenants, fixing air cons, or mowing lawns. So for us, that's why we kind of went with more in the hospitality side. So the value proposition is, consumers, especially nowadays, they're always looking for something new, right? They want something easier. Nobody wants to go through a 2 to 4 month, document paper process with 2 or 3 third parties, and then to significantly leverage themselves through things like home loans to make one very targeted investment. And so we kind of, strip that all away. And we try and package it in probably the most feasible way as possible, meaning, ourselves, third party, auditing partners, we look at the assets that we bring on chain. We make sure that the yield is highly likely, although not guaranteed, because there's nothing guaranteed in the world. But we go on track records. So we like to look at assets that have performed well for the last few years. will continue to perform well, because what people ultimately want from real estate investment is passive yield, right? And to also be able to have the ability to have that asset appreciate. And so those are the two kind of core focuses that Propbase has at our heart. So when we build products, when everything that we do is kind of designed around that. And I think that's kind of the way, having been in prop tech and in real estate and doing, thousands of property transactions over the last, 10 years, I see this as the way going forward. And it wasn't feasible really until the emergence of 2021, when smart contract functionality, multiple layer ones started coming on the market. We ourselves were building on Aptos. It's in the Move programming language. You have low transaction fees. So now, only recently in the last 2 or 3 years, this opportunity has become available. And so we're kind of, I like to look at Propbase as really the green field. There's not a lot of head-to-head competitors that we have in Southeast Asia, and some of the barriers are about a year ago, when I talked to people about tokenization, bringing assets on chain, there wasn't a lot of familiarity with it. Real estate in and of itself is traditionally a very conservative asset class. But now, with some recent news, I think you probably heard the headlines, a few months ago around March, you had BlackRock come into the space, very bullish on tokenization. You've got HSBC, you've got specifically here in Thailand, they announced a $1 billion tax break for all investment tokens. So you've kind of got this perfect storm where it's fundamentally good. It's easier for users, and you have the benefits of blockchain technology. And then you have platforms like ourselves and a few others around the world, which are all great builders, really utilizing smart contracts for the way of which they've been designed, which is the redundancy of administrative tasks and small processes.
Yeah, I think you made a few good points there that I kind of mentally noted. I was thinking to myself why you were talking, especially in the last point you made, in that, I was looking into tokenization for a while now. I was co-investor in a project that looked at, wasn't tokenization of real estate, but it was debts and tokenized debt, and tokenized equity, et cetera. And had the same type of conversations you probably had, whether it was a year ago, 2 years ago, 3 years ago, this idea of tokenization was foreign to most people. And it was hard for people to connect, the value add, literally. Like, okay, well, some of those value adds were a bit easier. Like, well, you can invest starting from this much rather than this much. Okay, people kind of understood that. Yeah. But the idea of kind of opening up liquidity, or what that really means, was lost on a lot of people. And while you were talking, I thought to myself, kind of the reverse of that, which is there's definitely a growing trend globally where the current younger generations, I forget the name of these generations, I don't know, Z, A1, I don't know what it is, but the younger people don't have this same push. They don't have the quote unquote American dream, right? They don't have this, I want to own a house, have a dog, a family, 3 kids. That has started to kind of come apart, for better or worse. And if you look at the GDP of any major country, whether that be the US, whether that be the UK, any major economy, one of the biggest pieces of that is homeownership and real estate and building new houses. And I'm going to get a question out here somewhere, but I'm thinking, like, the Propbase. I
get your point. Yeah.
Propbase and stuff. So it's, and then I guess it points to BlackRock and all these other, the tax incentives and everything. I think governments are starting to realize that if they don't enable things that can allow people to put money in the same place as their grandfather, their grandmother, and their mother, because now obviously they're priced out of the market. They can't buy a house, but they can invest 10,000, 20,000 and get some of the fruits of home ownership. I think they understand that it's going to be a disaster for world economies. To be honest. It seems that, I don't know if you think the same thing. Like, if you haven't ever had that thought in your head.
Yeah, you're right. I mean, well, I live in Southeast Asia, but obviously I'm American. You know, we're both, you know, Americans. But yeah, I mean the price of houses over the last, since the corona pandemic, you know, has skyrocketed. So it's just unachievable. And you know, if you go back 10, 15, 20 years ago, I mean, it was still affordable, but it wasn't like it was, you know, a long time ago in the 1990s. And so homeownership and being able to work for a year and then put a strong down payment onto a house and get a short-term loan, not a super long loan. I mean, that was achievable then, but now in Gen Z, it's not achievable. So that is a different topic, though. That is more like inflation.
I'll get to philosophical, but because this wasn't in my head 2-3 years ago, right? So I'm talking about tokenization, and I didn't think about why BlackRock might come in, you know, for example. But seeing it now and understanding kind of BlackRock's mentality, I think there's some writing on the wall, and I think that's similar with Bitcoin, for example, and ETFs. There's writing on the wall that has become too apparent to not pay attention to.
Correct. Well, I look at it like, you know, the internet disrupted information. You have Bitcoin in and of itself disrupting money or value, you could say. And now through tokenization, you have really the emergence of disrupting traditional asset classes. Real estate's one, but there's bonds, equities, T-bills, everything. Where I see the industry going forward, and I think where some of the big players see the industry going forward, is the benefits of tokenizing assets, placing it on a blockchain, having it transparent between all parties involved, whether it's different intermediaries, so on and so forth. And then the correlation of that data almost on a real-time basis through smart contract functionality is like, it's just bringing the assets to life, which were, you know, not that way, you know, have historically, specifically for real estate. I mean, you'd be lucky to get your house appraised every 3-4 years. I talk with a lot of fund managers. Their portfolios are only appraised, you know, 30% every year. So that's 3 years. So I think, you know, now we're taking 3 years and bringing it down to 24 hours. And, you know, through smart contracts, that can be brought down even further, all the way down to 10 minutes. And done so feasibly on blockchains that are, you know, low transaction fees, right? So our model actually wouldn't work as well if we were on a layer one like Ethereum that had a high transaction fee. But when you're on a layer one solution that's secure, that's built out and robust and has a strong track record, you're able to do a lot of things with the property in terms of data. And I think that's one of the areas that is probably not talked about as much. But, you know, the fractionalizing it parts, transferability between tokens of different parties, like that's very clear. But what actually gets me excited, I don't know if all the listeners want to talk about, it's just the correlation of data, right? I think it's immensely valuable. And I know that's what Chainlink is thinking through oracles and bringing, you know, real estate markets onto the blockchain and correlating that data and creating, you know, essentially dashboards where you have these real-time metrics and live asset classes being traded and so I think that's the future, and that's probably what BlackRock sees and all these funds. And I think, you know, there's a portion for, you know, not only sophisticated, but, you know, also retail investors to participate as well, right? So it's kind of a level playing field, which is quite exciting. And that's kind of the democratization of it as well.
Correct. Yeah, we saw the democratization of markets literally in the 80s and 90s. Of course, they're digitizing now, but in terms of real estate, we are just now starting to see. In small spaces and regions around the world for that to start to happen. And I was going to say we all know, but we all don't know. But anybody who was in the markets in the 80s and 90s knows what democratization and then dematerialization did to those markets. They expanded fast and they expanded massively. 20, 30, 40 times their size that they are now. I mean, it was well, for traditional markets, it was fast.
Correct.
Correct. And because we're, you know, this tokenization and the digital market the way it is, we have the ability now to expand much quicker, much faster. And the transparency angle, so, talking about Gen Z, I know when I talk to younger investors, one of the things that they really want to see is kind of change. And they want people to be held accountable. They want to know what's happening. And well, the blockchain is as transparent as you can become when it comes to data, when it comes to sourcing and moving around data, transferring data, and everybody having access to the same data. Disseminating the data can be a bit difficult, but that's where, layer twos come in, and that's where apps come in and dApps, et cetera, to help people disseminate what's there. But yeah, I think you're right. I think I don't know if you've been to Dubai or UAE in the last, 10 years or so, but I think it was roughly 10 years ago that data is the new oil. They started saying that, and they keep saying it, and I think they're right.
Yeah, correct. Yeah, correct. Yeah, and I think, so I mean, but I also can tell you, like, it's regionalized, right? So it's market to market. So in certain areas, it'll disrupt faster. So Southeast Asia, where we're at, you have a high demand for real estate investment. You have very healthy markets. You have strong urbanization of, the capital cities, and, positive regulatory frameworks, progressive regulatory frameworks, right? So as where you take someplace like, I don't know, I'm going to bring up an example here of like California, right? It's just not necessary as much there, right?
Or as possible, because they're definitely not. It's overregulated. They're not progressive. I mean, they're progressive in some ways, but when it comes to wanting to be progressive towards new business, etc. No.
Yeah, and it depends. So I look at I kind of feel Southeast Asia is one of the regions that's largely overlooked by blockchain communities, cryptocurrency communities. But if you put it together, not including China and not including India, it's still 650 million people, and one of the most amazing things, I don't know if you know this, but Southeast Asia's got the highest crypto adoption of anywhere in the world.
That sounds about right. I mean, we know we wouldn't be where we are in crypto without the initial adoption that happened, mainly in China.
Yeah,
maybe because they were trying to escape cap controls, but still, that was the initial push. And when it comes to, and I don't want to equate gambling with investing in any way, shape, or form, but we talk about a retail sector. Lots of retail people are more gamblers than they are investors or traders. They may not think that, but that's essentially what they're doing. And Asia is known to have a mind. People like to gamble in Asia. And I can say that another way. They like to take risks. They are a population that are much more pro risk than, say, the Nordics, for example, who historically are low risk.
Yeah, correct. Yeah, correct. Yeah. So, and Asians, I've been in Southeast Asia for so long. I mean, the biggest thing is also purchasing real estate, right? So real estate investment is highly, focused for most families, for even small businesses, even, successful businesses, larger businesses. And so, I
think Asia is still in many ways, in some ways now, still much more traditional in many aspects than what's happening in the West. So at some point, probably in the 70s, 80s, the West started to diverge from, I mean, it takes time, it takes decades, but started to diverge from a more traditional, and real estate is a very traditional investment, but Asia is still very traditional in that aspect, and that's why they continue to see growth.
Mm-hmm. Yeah, correct.
Cool. I was actually going to ask why Southeast Asia, but I think we covered that in a few of these answers. So I'm going to ask one last question before we go to the crowd. I might have another one later, but so obviously we just listed the token at Coinmetro, and I think we're both excited about that. There's a raffle going on right now, so if you guys don't know, if you jump in and trade some Propbase every 100, I think it's dollars or euros worth of Propbase that you trade, you get a raffle ticket, and we're going to draw and give away a whole bunch of prop. And so, open an account, trade, buy some prop. It's going to do well, and we'll see who wins the raffle. By the way, it ends on July 16th, just so everybody knows. Having said that, the token. So give us a bit of tokenomics, I guess, on the token. Like, what does the token do? How does it interact with your marketplace?
Yeah, great. I mean, great question, and we always like to talk, especially on this AMA, right? Because we're talking about it. So, Propbase, we have our real estate tokenization platform, and we have a native utility token called Props, and just listing with you guys. So, one of the core functionalities when we just first set out to do and build Propbase, we first looked and said, hey, do we need a token? Is this really integral to our platform? And we came to kind of a unanimous answer amongst myself, our leadership team, that it was going to play an integral part into the Propbase ecosystem. And so props on Propbase serves as a uniform method for really all property transaction fees. We have membership tiers that require props for people who want to invest in properties that we list on our platform. And we also have a rewards protocol that we're building out at this point in time. And that's really to incentivize new users to come to Propbase. And so what we've done is created, utility through every product that we build and deploy. And one of our aspects was we wanted to provide, a healthy token environment, largely community focused. So in our case, we didn't secure VC funding before. We're largely about 75% of our total fully diluted supply or total max supply is allocated for community. And about 25% is for smaller other allocations. So we wanted to have a healthy kind of trading token that people could obviously trade with. They could use that as a metric to our success. And we're very strong in marketing too. So we launched about 2023 in November is when we did our TGE. And I think that we're now, significantly larger, but we've had a very strong run. We have about 1.4 million trading volume. We're listed on, 8 or 9 different markets now. And part of our responsibility is really to build, enhanced utility within all the products we build. We built one specific product called Propbase Yield. Users can go on, it's single-sided staking. They can stake their props and earn props. And so that helps us out because we're able to lock up a certain amount of our circulating supply. And as we onboard more users onto Propbase and more users require props, they have to go and buy that on an exchange or on a DEX or somewhere. And that creates value, right? So everything we do is to create what we consider to be or try to be positive price action or supporting price action. And we've done well. I mean, we have an exceptionally healthy chart. We've got an exceptionally healthy community. And we have, very liquid markets pretty much everywhere. And so, I mean, it's kind of, as you mentioned in the beginning, like, well, we have real estate tokenization, which is traditionally very conservative. And through our protocol and having a more, let's say, utility token base that's traded on multiple crypto exchanges, we have different appetites for different investors. And it is, we always say that there's kind of 2 areas of our business. There's the fundamental, which is the real estate tokenization side. And then there's building out our props token economy. So we, having a conversation here, we listed with you guys a couple of days or a couple of weeks ago. We fall through with our props token economy kind of build out. So we've got a roadmap for that. And, we're earmarked to really become one of the top 500 cryptocurrencies as per, CoinMarketCap. We're very targeted in reaching that goal. And, we kind of noticed we wanted to build also a strong community. And we thought having also a native utility token would incentivize people to get more involved with us and things that we're building and help us with beta testing. We had over 230 beta testers on Propbase Nexus. And so that's been really rewarding for us in terms of the participation and community engagement. And we like it. It's fun. And I think that, it's really one of the exciting parts of the business.
Absolutely. The first thing you asked, the first thing you mentioned that you asked, like your leadership team or everybody was thinking, do we need a token? And I've been famous for saying at one point that, if you go down deep enough somewhere, no business needs a token. However, because need and wants, or need and optimization, and those sometimes are two different things. So even Coinmetro doesn't need a token. You don't need it. To be fair, even you could say the Bitcoin network doesn't need a coin. Doesn't need it, but if it didn't have it,
Yeah, correct.
we wouldn't be talking about Bitcoin, because no one would be spending thousands of dollars on electricity to process transactions for someone else. And so, and I think this idea of community is probably, for me at least, and it kind of seems like for you guys as well, is probably the biggest reason that you have a token, because the token allows you to give back to a community that essentially helps you grow your business, helps you grow awareness, and also becomes some of your most critical customers, which actually help the business, but at the same time become some of the biggest cheerleaders. So you get kind of this like living organism that businesses that, to get that in a normal business, like a Web2 business is very difficult. I mean, it's just difficult, to be honest. And I think tokenization in that respect really helps drive this idea that we're kind of all in this together.
Yeah, correct. Yeah, correct. And that's a big focus of Propbase, right? So, and I think that as we are the platform builders, our objective is to build utility for the token. Our objective is to build out a token economy, to make it healthy, to increase all the metrics, right? Mm-hmm. And I think that's probably one of the, for myself coming from Web 2 to Web 3 is, it's a great way to organically grow your business and user base. Yeah. And I think, but there is a responsibility on the platform and the development of that to build utility into it. When we start on the whiteboard, we put, what is the core props utility? How is it going to be used in this, let's call it a module or feature set or sub product that we're building out. And that's kind of where we start, and we go from there. And I think that's for us. This has worked quite well. I mean, and definitely it's one of the best ways to engage people, large community participants, and for us also, it's incredibly exciting. And so I think from my perspective, and I've got a few people on my leadership team. I haven't mentioned them here today, but I mean, it's kind of what we initially wanted to set out and do. And so we've been able to be fortunate enough to achieve a lot of those results. And I think, we're not stopping. We're very early into our process. Real estate tokenization platforms or real estate investment, like they kind of have long-term visions. So you have to set up a corporate structures. You have to do everything from compliance and regulatory landscape. And so, for us, we're very early in the journey. And I think we've, got a nice, a few years ahead of us, 5 to 10 years ahead of us where we're really early in the business, early in the sector, very greenfield. And hopefully everything continues on and does well, and we continue to execute and deliver on what we promised with our roadmaps and product deliveries.
So quick side question, just because I'm curious. So is it, and this could be a real quick answer, and then we'll move to somebody else's question, but is the general kind of structure on the back end of how you organize these deals like SPVs, you use like special purpose vehicles? Is that how they're tokenized in the back end, or is there some other magic sauce that happens?
Yeah, you can there's two ways you can tokenize assets. So there's SPVs, which are generally for larger asset token offerings. So those are securitization vehicles. Lots of platforms also use DAO LLCs. So where the actual token holders themselves are the owners of the underlying entity, and there's voting rights. We do this as well. It's in our white paper. Those are generally for smaller asset values. But when you want to go larger, say for a shopping mall or for something bigger, then you would go more down towards the securitization route. And I think that there's regionally, it also matters where you are, right? So, and specifically who your users and where they're based. But yeah, I mean, lots of platforms approach it differently in their own respect, and it just matters to who their user base is and where they're tokenizing the assets, right?
Yep, absolutely. Thanks for that. So it seems like we asked a question. So I don't know. I think it was the first one that popped up. So I think we probably already touched on this, but given that it was asked, I'm going to post it. So our tokenized real estate marketplace is the future for mass real estate market investment.
Are they? Yes, I 100% see that as being the case. There's one hurdle, and that is removing the Web3 aspect of it in terms of a front-end UI UX. So how do we get mass adoption? Blockchain is a phenomenal technology. It does everything that we want it to do, but it is a back-end technology. And so from a front-end perspective, like myself, our entire technical team, we were together last weekend, and our whole conversation was, how can we, remove the complexity of wallet setups, remembering your passphrases, connecting it, having all of the supporting currencies associated with powering transactions, and really trying to bring it front end from a user perspective so that blockchain is working behind the scenes. So if you want to dig a little bit deeper, you can see your transaction hash, you can confirm your transaction, and then trying to keep it a smooth, user experience. So I think that's the tackle that we're approaching and how we're approaching that market. And I think that's where you begin to see a steamroll in onboarding more users, and that's kind of how I could say the beginning of mass adoption happens. But here's another thing: is you also got to bring great assets. So you got to have assets that have a global appeal. You got to have assets that people want to buy. I always use an example. If Elon Musk was to tokenize a Tesla factory or a charging station, that would be news everywhere, right? So, or even the underlying, real estate value of that facility, right? That would be phenomenal, right? And actually, that's happening. So I think, bringing, it's also a great way to bring, brands and global brands to Web3 in a utility-based format. So whether it be real estate or whether it be other asset classes, comparative to 2021, where, if Nike wanted to get in, or if Adidas or any company wanted to get in, they could just get in through like NFT collections. So I think now through tokenization, they're seeing a different approach, and one that is more long-term.
Yeah, that was a great answer. I think that, my opinion is essentially the same. To talk about tokenization forever. I think my vision of the future, which is horrible for my own business, but I'm going to throw it out there. But my vision for the future is kind of imagine an app on your phone, like your Google Wallet or Apple Wallet, but it also contains tokenized value from all your interactions on a daily basis. The difference is that the UI UX of that app is, you don't need to understand anything. Just like, I had to understand what the internet was, so did you back, 20, 30 years ago when we first used it. And, my mother told me the internet, my mother basically told me not to do anything on the internet, and then the internet, was a fad. Everybody's heard those stories, but it's true. And, to be honest, the probability that she was right was pretty high. But she turned out to be wrong. And the thing is that when the first people come into anything, so the first people that came into the internet to build on the internet, the first guys, and even us sitting here, we might be the first, but we're still early, to be honest. When you build on something, many people make the mistake of getting really passionate about what they're building on and assume everybody else is going to care how something works. But in reality, the mass public doesn't care how it works. It just needs to work, and work better than whatever they were using before. That's it. And so I agree with you 100%. Blockchain, in 10 years, if we're still using the term blockchain and crypto and we're talking about gas fees, we've made a big mistake. Because what should be happening is that people have a very easy user experience. Us as businesses are able to utilize these technologies to provide transparency, provide optimal transaction speed, cost, etc. But the end user, doesn't care if you're on Aptos, Ethereum, sending, you know, a letter via snail mail. As long as for them the experience makes sense, they're good to go. Right?
Yeah,
That's
I
it.
agree. Yeah, I agree. Yeah, and I think you know, our approach is decentralization. So we're a decentralized protocol, right, as well. So it's like it's a balance, you know. So we don't, in our particular case, we don't custody tokens. So I think, but yeah, I think
Cool, which is actually a really good point because most, at least what I've seen, most tokenization platforms are closed ecosystems.
Correct. Yeah, correct.
And so that's a big point actually to your benefit for Propbase for sure.
Yeah, correct. Yeah, correct. I mean, that was what we set out to do, and it's challenging, but it is overall. I think it's just a better product in the long run, and as long as, you know, this is the way that and we have phenomenal blockchain developers, like, you know, and we're very advanced in Move now specifically, and so we're able to do things and really be able to keep at our heart, you know, decentralized non-custodial platform at a protocol level, and then just the interface sits on top, and that's how you go in and access and process transactions. And so that's kind of our ethos. And so we've got a long road ahead of us, but we're really excited. I see this as, you know, and having been in prop tech for a long time, this is where it's going, and this is what people want, and this is, you know, there's going to be, like what you mentioned, some resistance, not only to real estate, but to really everything coming on the blockchain, specifically, you know, equities or anything. But I see that is the way it's going to be. You know, in 15 years, you know, everything can be tokenized. You're going to see lots of funds become tokenized. Everything, it's just better that way. And but will the user know or care? No, but you know, to keep governance and to keep everything at a transparent level, that's where the benefits of blockchain happen.
Yeah, absolutely. I couldn't agree more. And yeah, I think that at the end of the day, we are in I mean, there's many books written about this, but, you know, we've gone through many revolutions. So we've had the different revolutions throughout our time, and now we're in kind of a data revolution. Part of that data revolution is obviously owning your own data, Web3, all these things. And this is square right smack in the middle, because you're giving the power that people used to have before the modernization of markets, which are supposed to make them better. We're going backwards to a better time with better technology.
Yeah, correct. Yeah,
right?
correct.
We're going back to kind of the barter system between individuals, but by way of an optimized technology. Yeah, which is cool because, you know, who needs a middleman? All that does is cost money, waste time, and add risk.
Yeah, correct. Yeah, correct.
Yeah. Cool. So I think this was touched on a bit as well, but Contrarian posted this, so you can touch on it a little bit. But so you mentioned he's asked about the grand plan in BlackRock. You mentioned a bit about you think it's more data, like kind of connected to data. I think you might have asked this after you said that, so give him a recap.
Yeah. I mean, tokenizing assets and bringing them on chain is inherently extremely profitable. That's first and foremost, right? Because you're doing a transaction when it's done. So that's probably a very solid reason. Data and transparency and interoperability between different companies through correlating tokens and everything from a smart contract perspective is very useful. It's just more efficient, right? So you have a lot of benefits, and especially if it depends on what blockchain and what are the parameters of that blockchain and how it's tokenized and everything. But the benefits of bringing assets on chain is profitable and it's more efficient. And I think BlackRock, and not only BlackRock, but many people have realized it. And, you know, when we first were conceptualizing Propbase and in a decentralized protocol, that was what our experience was. We were like, hey, this is going to be more efficient. We're going to lower the transaction fees. We're going to streamline it. We're going to enhance liquidity on the secondary markets. We're going to be able to do a lot more with the asset than we were previously able to do. And what happens is you grow that market, like what you mentioned, when you digitalize things and you open it up to a larger total addressable market size, that sector grows 30, 40, 50 times. And that's what's going to happen. And is it going to happen very quickly in the next 18 months? No, but it will happen, and it will happen consistently, and it will begin to steamroll.
Yeah, and I think another point to mention is that historically, the bull cycles and bear cycles we've seen in crypto have been largely because of only retail money, a specific type of retail money, and on top of that, no real assets that had long-term calculable ROIs. And so the more assets you bring into this market that have calculable ROI, it's easy. If you like, this is probably really hard for most people to understand, but if you go to someone that's been in markets for a long time and say, what price me Bitcoin? There's no formula, honestly speaking. There just isn't, because there are different pieces that you can try to, you can take electricity costs and mining costs. There's some things you can use, but to be honest, it's just not a traditional asset. It's almost impossible. But price me real estate, people can go, okay, in 18 months it should be worth this, 22 months it should be worth that, depending on blah, 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 blah. It's a much easier, that means money comes in, money stays in, markets become less volatile, markets become larger, market caps become larger, etc. So yeah, it's also a good thing just for the crypto market in general to bring these type of assets.
Yeah, and it'll be interesting to see how it's calculated as well, because it is in and of itself separate, right? So once the total, assets tokenized on chain hits $1 trillion, and then is projected by Boston Consulting Group by, let's say 2030, I think is what they said. There's about $15-16 trillion. You just got massive amounts of value on chain, and maybe I always say, like, hey, look, if you want Bitcoin to hit 10 million bucks, you better bring the world on chain, right? Because that's the transaction
what you
value.
need is more liquidity, right? So if you imagine everybody taking profit on a stock, on a commodity, on a whatever, a bond, they all have instant access into Bitcoin, which would happen through businesses like Coinmetro, for example, that list all these assets. Or exchanges, or depending on how the market looks 10 years from now. But still, that means that's exactly why altcoins used to pump when Bitcoin pumped, because people took profit and they instantly moved it into other assets that were much smaller market cap. They can grow, their ROI goes much faster, etc. And so if you multiply that by the size of the traditional market, which I have a figure in my head from when I was selling tokenization like 3 years ago, but it's just the settlements of 3 of the U.S. markets, not including the bond, the debt market, which is the biggest in the world. Talking about NASDAQ, Dow, and I think maybe the S&P, $1.4 quadrillion a year in settlements. Quadrillion. I don't even know how many zeros that is, but I can tell you it's a lot. That's a big number. Yeah, it's not a trillion, it's a quadrillion.
Yeah. And what is kind of interesting as well, I think in 2021 we had those CeFi platforms, right, who were accepting currencies, but they weren't like, how are they generating the yield, right? So tokenization, I'm biased for real estate. I'm passionate about it. I love it. How I
would hope, man, because if you weren't, you're in the wrong chair.
Yeah, I mean, it comes in from the rental of the asset, or basically that's it, right? And so it's very clear, right? So I do see, as we go up, people, there's kind of a risk on, risk off. I see tokenization platforms as being, kind of a risk off aspect. And so as long as, investors are going to be able to divest in a relatively quick time frame and to have the liquidity there to be able to do so, that is kind of the key as well, I think. And that's kind of how it plays into, specifically in a narrower vision, just the crypto cycles and Bitcoin bull run.
Absolutely. And it brings additional cash flow. More cash flow means more money flowing into the market. I don't think, there's not many negatives. If there is a negative, it's very much outweighed by the positive. That's for sure. And that negative is probably short-term, not long-term. So, okay, so we'll pop up, I think, Conrad. I would try to read your last name, man, but I would destroy it. So I'm just going to say Conrad. What is the sentiment towards real estate in Southeast Asia with the China real estate entering difficult phases? No impact, still main investment for people.
Yeah, great question. I get that quite a bit. So the Chinese real estate market is not very good. It went boom and bust. It doesn't really affect Southeast Asia whatsoever. Actually, I would say that it probably positively affects Southeast Asia because, the largest demographic of overseas buyers in Thailand last quarter were coming from China. So, it positively drives up market prices. It positively, creates demand. So for us here within Southeast Asia, it's not tied to it. So there's not a lot of Chinese developers here in Southeast Asia. There's, some joint ventures, but there's just nothing phenomenal. And so I think that there are a few, I'd say, but there's no adverse effect. And I would say, Chinese buyers are probably more looking at Southeast Asia and more specifically Thailand to choose their investments. And we've seen that time and time again. Yeah. Quarter on quarter, specifically for the last year.
Yeah. Big markets with expendable income, when their own markets aren't doing well, find new markets.
Yeah. And the Chinese market is just, boom and bust, right? So you've got a massive issue with oversupply and ghost cities and everything. I don't even know the full details of it. I've watched a few, but then you have real estate developers who are doing pre-construction sales, which is very risky. And so, yeah, I think that, but in Southeast Asia, it's relatively small. I mean, Thailand is like one, province of China, and, China's got tons of provinces. So it's, relatively small.
Yeah, very great answer. Thank you. Contrarian back. So what is the biggest tokenized real estate marketplace at the moment that you know of, I guess, would be a...
Oh, that I know of. The funny thing is, I have a lot of friends in RWA space. Yeah, I've got tons of friends. I love Block Square. They also have a native utility token. I was on an AMA with them last night. I've got tons of friends around the space. You've got very successful platforms in the United States. A lot of them are greenfield. They've only been around for a few years. So, I'm a big fan of let's see what else, other ones. Lofty AI is good. Here's another thing is you kind of have different takes on it. So each protocol in and of itself is different or unique in some way. They could be tokenizing the underlying equity value. They could be tokenizing forward-looking rents. So what is the largest with on-chain assets of any marketplace? I don't know. I'd have to look into it, but I'd say, you've also got Centrifuge out there, but they're not only exclusive to, I was on an AMA with them as well last night. But the RWA space is built with phenomenal builders, like top tier people, passionate about solving real world problems and using blockchain to do it. Some of the best people in the space, and RWA platforms are kind of synergistic in a way. So there's some regional or focus or protocol design that differentiates them from others. And so there's always this kind of common strong bond. I'm very also good friends with Galileo Protocol. So they're more focused on the underlying metadata. So I think, tons of platforms out there doing it their own way. Which is the biggest? I don't know. We could look at it, but you also now have a few platforms in the United States, a few platforms in Europe, and then obviously us here in Southeast Asia. And so, but we plan to be the biggest. And so, we're bringing on, amazing assets, and we're doing and executing at a very fast speed. As mentioned, we've only been around for about 7-8 months. We've launched one product. We're launching our flagship product. We've got, we roll out new product development about every 3 to 4 months. We've got fast execution. My background specifically is scaling platforms, and I've done that multiple times, 3 times specifically over the last 10 years, scaled those businesses and exited those businesses successfully. And with Propbase, we're planning to do the exact same thing.
Kevin's don't mess around is what Kevin's trying to say. That's just throwing that out. Very, very cool. So I'm going to jump. So for those of you that have been asking questions, there's one specific that I know someone's going to think I skipped on purpose. I didn't. I'm just going to another question that follows this one really nicely. Then we're going to jump back to yours, just so nobody gets upset. So seeing as you were mentioning some of those competitors, it's a great question to follow up with. So, So what differentiates Propbase from the 100, well, I don't know if there's 100, but the other real estate tokenization projects such as Propbase, and Lofty? And have you heard of Plume? And would you think of integrating it?
Yeah. Both Propy and Lofty are largely focused on real estate in the United States. So I'm an American, I know, right? But I'm focused on real estate in Southeast Asia. I would say we're more similar to Lofty because we're an investment marketplace and we fractionalize. Propy is a little bit different in the sense that they're more focused on bringing the entire asset value on chain, and the title and the transaction of the asset can be kind of and I can't speak to the platform specifically, but how so creating something similar to like a digital twin on the blockchain, which is, both those examples are exceptional builders in the space and thought leaders. I think that, are very successful in their space. And I think also for more specific to Propbase, so we're very regionally focused in Southeast Asia. We're focused on tokenizing assets that have professional property management. So in our case, hotels and resorts, usually by globally renowned brands, hotel brands. So Wyndham, Ramada, you've got Hilton, Pullman. These are the type of asset classes that we've announced partnerships with. So that's our focus. And we focus on really, passive income, not needing to worry about tenant management, not needing to worry about the maintenance of the underlying asset. And there is contribution in terms of governance for, let's say, certain metrics based on should that asset be detokenized at a later point in time. But Propbase in and of itself is a decentralized protocol. I think we're the only one, or one of the very few in the world that have taken that approach. As you mentioned earlier here, that a lot of them, they go within, kind of a gated wall, and it might have then been put into a tokenized structure, but then, the transactions you can't necessarily see on the blockchain in of themselves. So for us, we took it as a decentralized format first. We're not custodying, investors' tokens. And we're focusing on very specific asset classes. We have a lot of, my background also is working with a lot of property developers for the last 15 years and building marketplaces, property marketplaces. So I can tell you that we've got a lot on our plate here because a lot of them are really interested in tokenization. And there's a kind of a trend in the region that tokenization is becoming very popular. And so, that's good for Propbase, and that is our focus. And we actually look, in the future to partner with a lot of other RWA platforms around the world and create synergies. And I think that's pretty cool. With Plume, I'm not quite sure if I've heard of them. I think someone from Plume might have reached out to me a long time ago, but I'm not quite sure.
Yeah, I love those. I get these questions a lot too, and sometimes I do Google while I'm answering the question, to be honest.
Yeah, I should have.
I haven't heard of Plume either, actually. Probably in Lofty I have, but I haven't heard of Plume. I think interesting point you made at the end, which is what I hope to see, not for the market in general, is just this, blockchain and the technologies that make up blockchain are really made to create kind of, liquidity, really. And that could be data liquidity, that could be access liquidity, all those things are kind of core. And so I would love to see a day where there is, interoperability between, because if I can create a token, especially in a decentralized manner, and then be able to get liquidity from multiple other sources, or liquidity is able to flow easily between those sources, that it's already a game changer just being decentralized, just having the access, but then this other step makes it an absolute different world than what we're currently living in. So that sounds really interesting to me. But I would also mention that what I would say is a key takeaway for me, at least, and maybe for other people listening, is most people, when they ask the typical questions to a business owner, like, how are you different from these guys? Where do you see yourself in 10 years? Whatever, those questions that you get, whether it's a VC or, your neighbor. I think people kind of forget sometimes that when you say the word regional, I think some people think limited. But in reality, yes, but no. Because many businesses, even with blockchain, are still very much regional. The way that people buy or sell real estate, for example, or get involved in a project in Asia is going to differ from how they get involved in the same type of project in the US and South America. Not only the laws, but just the general kind of the way people invest, the type of deals that are done, the ROI they may be looking for, the ROI that's possible. All those things are very different region to region. And Asia is a big place. Southeast Asia is a big, 600 and whatever you mentioned, 330 million people. That's larger than North America.
Yeah.
In total.
Yeah.
So,
yeah. Great. Well, I think for us also, one of the things I like to say is we kind of, our stance also is from a technical perspective, or even from everything we do, is we put our heads down. We just like to execute. So, I think, I've been in competitive spaces before. I would say that the property portal, the property marketplaces where you're nothing to do with blockchain, but it has to do with, marketing and advertising, that is incredibly competitive. And what we found was that, put your head down, focus on execution, show results, and you do that, and that's the key to building the business, and good things will come. And so that's kind of the ethos that we put down. And I think that for us, we look at it like it's quite lonely out here over in Southeast, 650 million people, right? And we're like, all we need to do is execute as fast as we can, scale as quick as possible, take security as our highest kind of priority, build out a healthy, amazing community, allocate a lot of effort in building out our native utility token economy, make it accessible, and have a lot of fun doing it. And that's what we're excited about. And the whole Propbase team, whether it's our marketing team, we have a phenomenal community management team. Everyone loves working together, right? So
that's one of the hardest things to accomplish. So that's a big
right. Everyone loves working together. Everyone loves communicating with each other. We're very tight knit. We've worked together for a long time. 100%. I'm a very small business, I guess. Not like you're a bit bigger, but we're small. We're young, but we're incredibly aggressive, and we like to move fast. And so that's what I think.
You hit the nail on the head with, it's easy to have an idea. It's even easy to have a great idea, but it's hard to execute.
Yeah.
And so if you can execute, even a bad idea executed well will totally smash a great idea executed poorly.
Yeah. Yeah. We've all done bad ideas executed well, by the way. Right? So that's the learning curve. Figuring out what works.
I've had really great ideas, terrible execution, and I've had really stupid ideas in hindsight with amazing execution. And I'd still say I'll take a bad idea executed well with a fast pivot. More than I would want another great idea executed poorly. That's for sure.
Yeah.
So this last question, I think, is more to me. So you can get off the hot seat for a second, but it's going to be a quick answer. So, I guess Propbase may have mentioned Coinmetro having access to USD. So this guy's wondering how come there isn't a USD pair when it'll be activated again. So I can take this. So USD is a long story. I think for any business that operates in any type of what's considered a high risk business. It's been a long story. It's a long story in FX from my FX days, long story in crypto. Just to put that into context, we've had 4 different banks and or payment service providers, big ones, that serviced us for USD that have either been shut down by the government or bound bankrupt. And so, yeah, USD is not easy. What I will say is it is a focus point for us. We have 3 or 4 potential banks / service providers / electronic money issuance companies that are willing to support us on this. But, you know, once bitten, twice shy. So we're making sure that when we make this decision, it's a long-term decision. I do believe within the summer, we will have USD back on the platform. And so, and it should be a kind of, once we get through into the fall, it'll be an experience that you've never had on Coinmetro with the optimization and ease of moving from US dollars to, let's say, Propbase would be a one-click type of transaction. And so we're excited about that. It is absolutely a focus for us. There's a whole team working on it. But yeah, USD is, you know, it's like pulling a rabbit out of a hat, but for real, you know, not like with magic, just actually trying to pull a rabbit out of a hat. It's pretty good. So yeah, that was mine. So I think we got through all the questions. So I'll leave it up to you, Kevin, if you have anything else that you want to mention, something that I might have forgot to ask, or anything that might have popped in your head that you want everybody to know before we sign off.
No, this is great. Thank you for taking your time and you know, supporting us. You guys have been phenomenal partners for us to work with. We look forward to building a long-term relationship. My door is always open. You know, if you're listening to this now or you're listening to it later, and you know, hop in, join our community. We're super big on Telegram. We've got 20,000 members. Follow us on Twitter. We've got 150,000 followers, 140,000, somewhere around there. We kind of release a lot of information on Telegram first. I don't know if it's intentionally or not, but it seems to get talked about in there. And we've got, you know, really strong and really amazing community members, as well as really good community management team. So you can always get your questions answered. You can ask about, you know, how do you onboard with us? What is the best way to do so? You can even get, you know, personalized explanations and kind of short explanations, just what's the value proposition we provide. So you don't have to take, you know, the 40 minutes to read the white paper. But yeah, great. We have an awesome community. We've got awesome community members through and through who've been with us for a long time. And they're also like, I think there's some overlap between our community, your community. We did our IDO on AP launch with Katie Labs, you could say, but it's like AP launch. So it's not the same group. So they're very big in the Cadena ecosystem, very big in Flux, all that kind of stuff. So, I mean, that's kind of our core community base. And then everyone who's just really, you know, psyched about RWAs. And so, yeah, that's it. Join us and check us out. And you know, I'm always open for DMs if anyone wants to message me directly as well.
Awesome. Thanks, Kevin. So yeah, check out Propbase, get into the Telegram, get some Propbase alpha when you can. You can also join us on Telegram at Coinmetro. I'm sure you'll catch, well, maybe you'll catch both Kevins in there. I don't know. And me, myself, if you have a question, I still say Twitter, just as the other Kevin does. So I know it's supposed to be called X, but that's just a dumb name. I mean, sorry, Elon, but that's just, it's forward. For a messaging platform, maybe something else, I don't know. But anyway, so you can find me, I'm still going to say it, Twitter or Telegram at Kevin Mirko. So you can tag me any question you want about crypto or anything else in general. I get some weird questions, but I still answer. Have a great time, everybody. The rest of your, what's today? Thursday, and a good Friday and a great weekend. And thanks for joining us. Thanks for all the amazing questions. And thank you, Kevin, for answering. Cheers.